Good evening, all. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for Wednesday, the 4th of January, 2023, 6:05 p.m. Central Time. Well, the reality is the gold is holding up. Silver went into a correction mode, as did the copper market. Palladium market took off, platinum market backing off a little bit right here. The dollar, which was up 100 yesterday, gave back about a third of what it gained. That did offer some support, I think you can say, to the gold market. It gave up the day's best gains as it backed off a little bit, and probably in part is it's looking at some of the inflation stories. I mean, you're now in Brent, you're under $80 a barrel again. The differential, as you can see here, we'll talk about that in the financial update, about $4.5, $5. Nat gas still dropping. And I'll tell you the interesting thing. In Europe, they are so lucky in their own way. Yes, the panic happened, as we all know, 6 months ago in the gas, and they were going to run out, but they've got mild weather. We have had mild weather, and there's a lot of gas available, and we're seeing that here. The funny part is, I know I live in Chicago, and now we're seeing people's gas, they want to go for another increase. It's got to pass the state and everything, but everybody's trying to pass on. Inflation, it's here. I was at the grocery store just before I did this. I went out and got the night stuff. I had to get out of the house. I've been working at the desk since 4 in the morning. And I needed a break. And I went in and I was shocked. One of the wines, and I love wine, one of the wines that I like, I was buying, honestly, just 2 weeks ago for $11.99 a bottle. If I buy 6 today, they want $16.99 a bottle. What? Okay, and that's if you buy in their quantity. I mean, and then I started looking at other goods, and I was just walking around saying, well, what is going on here? And it seems to me that somebody in the store just decided to raise the price on everything. And I mean, pretty well. I was very surprised. And you can see the food inflation. If this is what people are looking at, it's definitively here, which leads me to this final comment. This is the week about labor. All you're going to hear about is labor, labor, labor. Today we had the JOLTS number, where you get the amount of ads for the people that are out there in the workforce. And it is stronger than it was in the last report. So the raise in the interest rates, the rise in it, is not deterring the companies that are looking to hire people. That hasn't happened according to the JOLTS. We get tomorrow the unemployment claims. And then we're going to get what? The jobs report, the all-important jobs report on Friday. So please understand these 3 reports are very important because of the last real important jobs numbers that we're going to get. Obviously, we'll get weekly claims for 3 more weeks before the next FOMC meeting on February 1st. But you won't get the other JOLTS, and you're not going to get another jobs report. If labor stays super strong, and if their surprises were there like they were in the JOLTS, I'm warning you, be careful. The Fed is not going to back off. In fact, did you read the FOMC minutes today? Not one member in those minutes thinks that they are going to see a reduction in interest rates this year. So that flies in the face, obviously, of the market. You can see that in the bonds and notes. But let's take a look. Here's the gold market. You can't get away from the fact this is the highest it's been in a while. For the week, and it's a shortened week, you're up 1.83%. The market has certainly had a nice run to the upside. The trend is clearly up with higher lows, higher highs on the swing line. Now, the swing line is a study I developed many years ago when my son, who is near 40, was probably 13. And I said, I could teach you how to chart. And you'll be able to tell anybody with this study, is the market an uptrend, downtrend, or no trend? And there's 5 sets of rules that I have that determine where the line should be drawn, created an indicator so it does it, and I don't have to judge about it. But the concept is there, and anyone you talk to that's a chartist will say, oh, the market's making higher highs, higher lows, or lower highs, lower lows. You always hear that. But what are those numbers? And I defy people to tell me where it's at on this, okay? Yes, I can see that's the highest high, but where do the swing lines belong here? And they come in and they give you the story. So if one were to buy this market and you had to stop under the most recent low, that's a big risk. It's $55 an ounce. Number two, we had a bullish crossover in the market. Now, I tried to explain this the other day, and I think I did it when I said when you got over this number, it normally means you're going to go up and make a higher high in the market. If it were a bearish crossover, a lower low. And you can see that is certainly what happened because so many chartists watch these things, and you want to be with the herd. I always want to be with the herd. You know, in Chicago at the Bulls game, if you ever go to one, Merrill Lynch would come out. Remember their ad with the Bulls going down the street and running? Well, the Bulls in Chicago have the same type of thing, and you see the bull running down the street as they're getting ready for the game. You know, it's animated, of course. But you want to be with the herd. I hate when people are trying to pick bottoms or tops. They're trying to fight the herd. No, 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 no. You want to be with the trend of the market, period. And if the herd's on the long side, go with it. It's a much easier flow. Now, do I think one should be long over a Bollinger Band? No. And the reason is only 5% of the time will the market stay outside of the black line to the upside or the downside. And if you go back and you look, you can see you hit it, you can get over it, you don't stay there very long, you get a correction. That doesn't mean the trend is ending. It means you've extended a bit. And let's face it, all right, here we are in the market that is, 2 days into the new year, and you've had a nice rally right in front of Christmas, the market came up. There could be a correction here, plus you're overbought. No, I left money on the table, and one of the recommendations that I had clients buying the market here and coming out the other day. Happened to be lucky, got a nice winning trade out of it, okay? Maybe it wasn't luck. Whatever the case is, that's what it did. And when the market gets to that band, I want out if it's not embedded. I want my clients out, that's for certain. Now, the gold-silver ratio, we were talking, this acted like it wanted to correct a little bit, and bingo, we're getting just what I wanted it to do. This is how the market looked yesterday. Came up to the resistance. Now, it's done this, it's gotten through it, and it seems to swing back. So here we are, we got over it right now, that's where we're at. Is this a fluke where it's going to swing back down, or is this something that is saying, no, silver's going to start losing to it? You don't know until after the fact, but so far each one of these have been short-lived as they've gotten over that. We'll see what it does, which takes us to the silver market. Have we lost the uptrend? We have not. You'd have to get through this low right here, this last arrow that I have pointing up, to negate the uptrend. Can you get into a downtrend here? No. Why? The worst you can have, let's assume you break through that low. You'd have a higher high and a lower low. That's not a trend. What else do I think happened? What did I tell you yesterday? I said you got up to the upper Bollinger Band, and I think the pros took their money off the table. The first challenge of a band, I teach this in the Enhanced Bollinger Band course. You want to learn how to do this. Believe me, I think it'll stick with you your whole trading life. And there are rules that you look with it, and I teach it all in that course, and it's under education on IraEpstein.com. So it got up there, and where does the market normally fall back to? Well, for regular viewers, and I hope you're one, and if you're not, let me explain this. I believe there's a line in the sand on every chart, a neutral number. I think it's the 18-day average of closes. Now, you may say, Ira, I like the 20, I like the 21. Whatever you like, terrific. I've used the 18 because I've learned how well it works, be it stocks or ETFs or spiders or futures. I just am very comfortable with it. Have I used the 20 and 21? I have. Did I used to buy services that would optimize which one to go with? Yes. Did I find it worth the money? No. Pick a number, I don't care what it is, and what it does, use it as a filter. When the market's over the number, you have a bullish bias. When the market's under it, a bearish. Bias is a filter of the other technical indicators. So if you have a sell signal, but you're over the 18-day average, you're not going short, but it's reason, again, maybe you don't want to be long anymore, which is exactly what I said. And how do you correct an overbought condition? You either embed, which means both red and the blue line are going to get over 80 and go sideways for a certain amount of days. I teach that in the course as well. Or you correct. And in this case, the market's elected to correct. What else do we see? You're probably going to go into a choppy period. Why? Whenever I see the Bollinger Bands narrow up that much, it often means that you're going to chop around for a bit as the market's trying to figure out what to do for the next trend of the market. In the copper market, you're literally caught between the upper Bollinger Band and the lower band. How many days in between them? 1, 2, 3, 4, 5, 6 days. So you got up to the upper band, to the down band, and now I wouldn't be surprised if the market gets back to the 18-day average soon. You're already oversold, not even close to embedding. I think the pros came out of any shorts they had today. In the platinum market, you had, as I pointed out the other day, 3 days in a row over the band. You rolled over yesterday, which is today, Tuesday. And remember, we're looking at Wednesday trade and the market's starting to correct even further. Overbought. I think the pros got out back here. And yeah, they left money on the table. So what? It's not about catching tops and bottoms. It's about getting that best piece of meat, that filet or whatever your favorite piece of meat is, out of that piece of beef and taking that home. That's what trading is about. It's not about picking tops and bottoms. It's about going with a trend and taking the center, if you can, out of it. In the palladium market, we came away from the lower Bollinger Band and went back and we're fighting at the 18-day average, that neutral number, that line in the sand for whatever the next direction's going to be. And as I told you just 2 days ago, what did the market do? The market got down. We were here and talking and right here. This was the day, Friday, December 30th, it made you run at the lower Bollinger Band. You tested it again. And now you got your bounce, and that's Tuesday, and this is today. Okay. So the market's starting to narrow in here. Why? Because it wants to see these next two labor reports. They're all so important. We got to see if the unemployment claims drop, go up. What are they doing? Are people getting jobs easier? And of course, Friday's all-important report. Now, the FOMC minutes came out today. Did you pay attention to those? Because they are important. Not one member thinks you're going to get a drop in interest rates. So I put that all together, keep it in my head as to what's going on, and I try to figure out, well, what do I do next? And what I do next is I explain this all. And I do it in my complete research. Now, let me tell you what that means. A minimum of on Monday through Thursdays, I put out 2 updates a day. Sometimes I issue a special update. In it, I will give trade recommendations, updates. A lot of traders will say, Ira, I use your morning videos. That's fine, but then you're not getting the updates from me at 11:30 in the morning when I adjust positions, or in the evening at 8 p.m. You're waiting for the morning. Nothing wrong with that. And a lot of people like to see how the trade's set up, and that's what I show. But then why should I be just locked into that? The markets change, I change to them, and I write about it right in those reports. That's how you go about it. And that's called my full research. Simply put, I would like to give you my full research for free. You heard me, for free. I'd like you to give it a try. 2 weeks. How do you get it? If you haven't had it before, don't try to sign up if you've had it before. I won't give it. If you haven't had it before, all you need to do is go to our website, go to free offers. It's a free trial. See that? Go to free offers. You can also click up here at any point. You will then start getting my reports. We will give you the charting software so you can keep up with us on a trial if you'd like that. Our QT platform for your mobile app so you can keep up with that, and you'll get the updates. You decide. Here we are in a new year. Why not take a look at it? Now, before you leave me, I'm looking to do some special reports, maybe as early as this weekend. So be ready for them if you're on my mailing list, all right? I want to get the labor report, the jobs report out of the way. And once that's out of the way, I want to look at the opportunities in the market, and I'll probably get something out either on the weekend or Monday. Be looking for me to start that. I won't do live webinars until I get back after January 15th. I'm going to go away for a few days. And when I get back, and it's only a few days, and I will be back, and then we'll probably start the week right after that with a live webinar. I thank you for watching. I'm Ira Epstein. Give us a thumbs up if you like this. You take care.